Successfully generated $75 in premium from selling covered calls. This week, the model predicted that 245 strike would be in the money for Amazon, and this prediction was super close. The model last week said Amazon will reach 240, 242.5, and 245. The last week high was around 244.68. So pretty good prediction from the model for Amazon last week. I was super conservative with my Amazon covered call, selling the 257.5 strike. I believe in Amazon for the long run. Amazon has underperformed in 2025 compared to the other Mag 7 stocks. I believe 2026 will be Amazon's year as they improve their margins and leverage AI robotics in their fulfillment centers and increase AWS market share. I was also conservative with my Google covered call, selling the 352.5 strike. I was bullish on Google while the market was fearful around the 150s. Now Google trades at 344. I want to keep my Google position for the long term, so I will sell at conservative strikes. I sold a $36 TOST call for January 31st expiration date. In the long term, I believe TOST has potential to turn around as a stock because their fundamentals have been increasing while the stock price is down. Watch my TOST thesis video in the top right. The quick version of that TOST thesis is that this stock is evolving from a growth story into a mature technology story. They became net income positive in 2024, posting $19 million in net income and revenue going up year after year. I want to invest in companies that are growing at a discount. I am down 12% on TOST as recording since I opened this position. In the meantime, I will happily generate premium off this position, and in the long term, I believe TOST will grow. I had a poor man's covered call for Adobe 317.5 short call with a 310 long leap call. Adobe had their record revenue year of $23.7 billion in 2025. This market is questioning Adobe's moat. Is AI going to take away customers? Are competitors like Figma and Canva going to take market share from the legacy giant? Although these fears are valid, we are still not seeing the financials fall with the stories. Revenue, net income, gross profit all continue to go up for Adobe. I did a leap call to capture on the trade while not having to constrain too much capital into one position. The poor man's covered call enables me to generate premium on a long leap. If we were to successfully make $75 in premium each week for a year, that amounts to $3,600 per year. This covered call strategy is about discipline and patience. This is not a get rich quick scam that many other channels try to deceive people with. This is about generating wealth, having your hard earned money start making you money. Udomo is about finding high quality companies that are generating cash flow and have future growth potential, buying these companies at discount, and if we can, and if we accept the added risk, sell covered calls against these shares. This is not financial advice. I want to share my financial journey here with you on this channel. Now, how do I decide which strike prices to sell? One thing I use is conditional probability, and I have these calculated on udomo.com. Here we can see the historic probability of Amazon's price action given the previous week's price action. We can also see daily and monthly relationships. For example, Amazon went up 0.37% last week. So given that Amazon went up 0.37% last week, we see that the conditional probability of Amazon being positive this week is 56%. But this week is a special week because we have earnings coming out. Google releases earnings Wednesday and Amazon on Thursday. So we need to be conservative in case of a pop after earnings. This is where implied moves come in handy. Historically, Google has an actual after earnings move of plus or minus 4.6% compared to the predicted move of plus to minus 6.1% on average. This shows that on average, options are priced at a premium because the market on average predicts 6% move, when in reality, Google on average moves 4%. The same can be said for Amazon, with an average predicted move of 7%, while the actual average is 6.2%. We can benefit from this inflation and premium because of the implied move of a known event, which is earnings. For me personally, I want to sell a covered call for Google where the break even is more than 5% based on these earnings historical actuals, and for Amazon, more than 6.5% break even strike. I may want to also add more buffer on top of this to be more conservative. TOST has earnings on February 12th. I suspect that the stock price will appreciate in anticipation of earnings as the date gets closer. Therefore, I will not sell a covered call just yet until we get closer to earnings. For Adobe, I want to sell a covered call higher than the 310 strike because that is the strike of my leap option. Now let's get into the model predictions for the week. Thanks for watching Udomo.